Alright everyone, so in this video I will be talking about risk management and how to leave runners. Pay very close attention. Let's begin. Alright, so this part is extremely important. I would say it's probably the most important part of this video. So let me start off with number one. You don't need runners to be a profitable trader. Yes, that's right guys, you don't need runners. You don't need them. 1 TP is more than enough. Now, why I would make the case to have a runner is because those runners at some point could actually cover a little bit of the losses that you have in the future. The problem is that again, there's still some risk involved in leaving runners. Now, number two, always backtest everything that I teach, especially this topic. Reason being is because any little change that you do to your strategy, it can be risk management, it can be anything else. Anything can have a significant impact on your win rate, on your risk to reward, on everything guys. So please backtest everything. Do not just take my word for it, okay? Number three, there are so many methods out there that I only covered the ones I think make more sense to me. Now you'll see a couple of examples, but there are many more out there. I just cannot cover all of them. But like I said, these are the ones that are most important and the ones that I have used, at least in my previous trading methods and even currently. Alright? And lastly, number four, always trade with the trend for best results. Please don't forget this. That is probably the most important part when it comes to actually trading the methods, right? So always trade pro trend guys. Don't counter trend trade and think that it's okay to leave runners. That's extremely risky. All right. So with that being said, let's move on. So first thing is first, go for a 1-to-1 first. If you're new to leaving runners, I recommend taking at least half of your position off once you hit a 1-to-1 or 1-to-0-1 risk to reward. After that, you can apply any of the methods I've outlined in this presentation or use your own approach. Now, this is exactly what I did when I first started leaving runners, and it actually helped me out tremendously. As a matter of fact, if you're someone starting a new strategy, try going for 1-to-1s first. Why? Because if you can't hit a small target, then how do you expect yourself to hit bigger ones? Get used to hitting 1-to-1s first and then systematically increase your reward and try aiming and seeing if you can hit those new higher risk to rewards, okay? You don't want to just jump in going crazy on the risk to rewards. Just go for something small first, and then afterwards, once you're comfortable, start increasing it little by little. Alright, so why I don't like moving my stop loss to break even. First, let me say this. It's not that I've never moved my stop loss to break even, and it's not that I never move my stop loss to break even. There's reasons why I move it and why I don't move it. But typically, I try not to move my stop loss to break even. I try to make sure that all my strategies are fitted to where I just set it and forget it. Okay, so I just wanted to explain that real quick. Now, moving your stop loss to break even carries the risk of getting stopped out at break even, especially when scalping on the lower time frame, only for the price to then hit your initial or remaining targets. So check this out. Let's say you entered into a short right here, right? You entered it with a limit order, price is going down, and you decide to move your stop loss to break even here, right? Well, what happens? Price, most of the times, or many of the times from what I've seen, and in my own back testing and live trading, I've seen price retrace up to that same area and then come back down, right? Or price will typically retrace into the same area that you decided to move your stop loss to, which in this case would be break even. All right, so that's why I don't like recommending to move your stop loss to break even all the time. There are times when you can, but I try not to do it so much. Okay. All right, so what can you do to leave runners? Well, the first thing you can do is target order blocks. Targeting order blocks is relatively easy since they're fairly straightforward to identify. Well, for some people. However, If an order block is too large, it may not be worth leaving multiple runners beyond it or even toward it, because the price can completely reverse after tapping into it. It's best not to target more than 2 order blocks. Going after the first one is already risky, and adding another increases that risk even more. Guys, leaving runners in general is already more of a risk than there should be, and so having multiple take profits or areas to target is a whole nother game. So just letting you know, if you're going to target order blocks, try to only at least target 1 or max 1. I don't even like the idea of going for 2, but if you are, then you can do that. So once price taps into your first order block, you can move your stop loss to break even, or you can leave it the way it is and target the next one. So these are just a couple of options, guys, that I'm giving you of what you can do once price taps into that order block. The next thing you could also do is, if the order block is too close to your initial target, then it might not even be worth leaving a runner. Example A right here, right? So as you can see, the initial target is here, and as you can see, there's an order block up here. Now it's fairly risky to target the order block above it. Reason being is because not only can it reverse on you, but I've seen, and I think you've all seen, moments where we've had order blocks get missed even as entries. Even when you use order blocks as entries, you'll notice that sometimes price doesn't actually tap into your order block and it gets missed. Well, you're also risking that happening to you as you're targeting an order block for an area of profit, right? So that's another reason why I don't want you guys targeting an order block if it's already near your first target. And sometimes it's not even worth the extra couple pips. It's not even that much money. Lastly, what you could also do is target the first order block after your initial target and close your entire position to mitigate risk. So like I said earlier, I'd rather you just target 1 order block, and as soon as price taps into it, close out the last and final position. All right. Now, yes, you can also target a higher time frame order block, but you have to be very, very careful when doing so. All right. I have a video coming up that's going to show you how you can actively trail your stop loss, and I sort of get into it there. But yes, guys, you can also target higher time frame order blocks. Alright, so here's a quick example of how you can target order blocks. So first pro tip is, don't target the end of an order block, target the beginning of it. What I mean is, in this case, if you're in a bullish trend, right, this top side right here, this end of this order block, this edge or whatever, that is what I would consider the end of an order block. And this edge right here, right, this edge, all this edge under here, that is the beginning or the initial part of the order block, as I would see it, right? Same thing here. This would be the initial or beginning of the order block, and up here is what I would consider the end of it. Okay, so as you can see, first TP was hit here. You can either move your stop loss to break even, or you can wait to see if price is going to give you more momentum to the upside in targeting that first order block. But again, it's up to you. You can move it to break even if you want. It's whatever your backtesting data tells you is best for that specific pair. Or after the first order block is hit, you could also target the next one and close your final position there. Okay, again, that is a little more risky, but it's up to you. Now, you can also target fair value gaps or imbalances, right? When using fair value gaps as targets, the same principles apply as those I mentioned with order blocks. However, be cautious when targeting fair value gaps, as there can be many and they aren't always easy to spot. I recommend using the provided indicator to help identify them. Finally, avoid getting greedy by trying to catch too many fair value gaps. Aim for a maximum of 3, as the price can reverse at any moment. So here's the thing, guys. If you were to open up the indicator and just let price play out, you'll notice that at any point, price can reverse after tapping into any of the fair value gaps. So this is a little bit more riskier than targeting order blocks, but then again, that's just my opinion. It's up to you and what you see, okay? But you can click the learn more button here in the presentation, or you can check the description down below. Now, same thing here. Once price taps into your first fair value gap, you can move your stop loss to break even, or you can leave it the way it is and target the next one. The second option you have is if the fair value gap is too close to your initial target, then it's up to you if you'd rather target the fair value gap or your initial target. In this case, you could make the case that maybe targeting the fair value gap might be better, but I'd still rather you don't. I'd just rather you you go for your initial target and call it a day. Lastly, you could target the first fair value gap after your initial target and close your entire position to minimize risk. So let's say you see a fair value gap near an order block, you could target that one, and after price taps into it, you can close out your entire position and call it a day. Okay. Now, pro tip: don't target the end of a fair value gap, target the beginning of it. Same principle applies as the one I showed you earlier in the example for the order blocks. This is the beginning or initial part of the fair value gap, right? The edge, the beginning edge, and the top of it would be the ending edge in a bullish fair value gap, and then vice versa applies for a bearish fair value gap. It's not that hard to understand. Okay, but yeah, guys, as you can see, price tapped into this order block, comes up, and I only targeted the edge. It's safer that way, at least in my opinion. Now let's move on. All right, so here is another example. Pro tip: yes, you can also target a higher time frame fair value gap. I would say that's probably even more safer, because at least you'd have a more general area of where you can target it, but I would still recommend you target the initial part of the fair value gap. So check this out: fair value gap near initial target. So in this case, I have two fair value gaps that are near my initial target, one under it and one above it. If it's under it, I would say go for the initial one, right, that high. But if you do see that this will give you a pretty decent risk to reward, even though this one that's above it might give you a slightly better one, I would still rather you target this one. Why? Because price could also reverse at this fair value gap, but it's up to you guys. I would recommend you back test it and see if it works well on the pair that you're trading on. But yeah, guys, but if this gives you a not so good risk to reward, like let's say it gives you a 1-to-1 and you're already used to catching bigger ones and you don't want to get just a 1-to-1, then yeah, you can just target this initial target instead, right? That high. But I don't like targeting highs that much unless, again, it's not very favorable risk to reward. So you could also target this fair value gap, but that's still a little risky. Either way, if you do decide to target it and you want to close maybe a second position here, you could target this one or that one. It's up to you though, okay? But don't get greedy, guys. Just target 2, max 3 things. But in my opinion, just go for max 2 as well. It's just up to you, yo. I'm just gonna leave it up to you. I'm not even gonna try to convince you to target at 2 or 3 max. I would rather you really just target one thing, but again, I'm gonna leave it up to you. Alright, so targeting fib levels. Targeting Fibonacci levels is probably the easiest and most common method out there. You can use any levels you prefer. I'm using standard deviations because that's what I've been using recently, but feel free to choose the levels that work best for you. Just make sure they're not too extended and avoid targeting more than 2 levels, as price can reverse at any moment. So yeah, what I mean, guys, by having your levels too extended is by physically seeing that your next or first fib level target is like super far out on the chart. But I'll show you in a bit what I mean by that. So the first thing that you can do is once price taps into your first fib level, you can move your stop loss to break even, or you can leave it the way it is and target the next one. Or if the first Fibonacci level is too far from your initial target, it may not be worth leaving a runner. Target the first fib level after your initial target and close your entire position to mitigate risk. Now that would be the third option. And these are the fib levels that I have been currently using as of lately. So you can copy those down and get to opening up those charts, guys. Let me show you a quick example. Alright, so as you can see here, I drew my fib from the top to the bottom of this range here, and let's just say I was targeting this liquidity right here. Price comes down, taps into this part, and what does price do? Come down, tap into my second fib level, retraces up slightly, and then what does it do? Starts going back down to my last fib level. And as you can see, the price looks like it started reversing to the upside. So that's why I try not to target more than 2 fib levels. And again, what I said when I was talking about your fib levels being too extended, Some of you might be using like Elliott wave fib levels, or the regular fib levels that already come in TradingView. Let's say your first fib level was actually the -1. I would not go that far down as my first target, or as my second target, or as part of my runner, or my first runner, because it's just too far out. All right, it's already a risk trying to go for a second one, and then if you end up trying to make this area your first target, you're opening up to a lot of risk and a lot of unnecessary risk. Okay, so just keep that in mind. All right, so the risk management portion here, I will talk about a couple of things when it comes to how much of your position you should leave open, how much of it you should close. So this is very important, guys. I really don't want you to miss this. I think you will greatly benefit from it if you just didn't close out the video. Please stick to the video. I don't know why you guys close out to the video. And another thing, I'm just gonna say it now, stop favoriting my videos and putting them in a playlist that you're not gonna touch. Just watch the whole thing, or make a separate playlist of my videos specifically, because then my videos end up getting stuck in a bunch of other crap that you're not gonna watch. I know you don't like me telling you, in a sense, what to do, but I used to do it, and I'm telling you right now, that's gonna hinder your progress. Okay, so make separate playlists for different content creators. Please be more organized so you can get through the content and learn in a more efficient way. All right, that's I'm just saying. All right, let's continue. Okay, always ensure that your risk management rules are followed. Never risk more than a small percentage of your account on any single trade. Here are a couple of ways you can do that. Ladies and gents, before I move on to the nitty-gritty here, please, if there's anything that we can learn from the recent Don Vo situation, is do not risk money that you are not willing to lose. That is another reason why people either double down on their trades or they close out too early. Please, guys, ladies, don't be dumb. Don't waste money that you're not willing to throw away. If this is money that you physically wouldn't burn, why would you put it into an account that you would then lose, and then still have the goal to complain and say, oh my gosh, I lost all my money, I don't know what to do? Sir, ma'am, why did you put that money in there to begin with? These are just hard truths, guys. Okay, these are just hard truths. Just take it. All right, so for the first initial target, price reaches a specific level. It could be your initial target, or the target that you want to use as your runner, or as your first runner. You can take 50% off of that position, or 50% profit. So let's just say you're targeting an order block, right, as your first runner, or as part of your first runner. You can take 50% off on that one. Now for the second target, price continues to your next level and you take another 25% off. So let's say you're targeting another order block, you can take 25% on the second one. Now if for some reason you do decide to have a third order block, then you can just take off the remaining position, or the remaining 25%. Okay, but like I said, I would much rather you just close your entire position at the first target. Or guys, you could also do this for your first initial target. Let's say you're not targeting anything specifically like an order block or a fair value gap or a fib level. It's just your first initial target that you would normally go for as part of your trading plan. You can take 50% off there. Okay, and then for your first order block, you can take 25% off there, and then for your second order block, you can take the final 25% there. And as always, I have my little warning: move your stop loss to break even, or moving your stop loss to break even is up to you. All right, so this one is actually a little bit more aggressive. So for the first position, you will take 20% off. Then for the second target, you'll take 30, and for your final, you'll take 50. Real simple, guys. I'm not gonna go too deep into this, but you already know how this should work. All right, and again, moving your stop loss to break even is up to you. Remember, y'all, backtest. If you want, you can check the description down below. You can sign up for Traders Casa. It's free software, although I'm not gonna lie, there are a little bit of ads in there. So if you want to upgrade, then you can use my discount code for 20% off your first purchase, and you can sign up with that. Thank you guys so much for sticking to the end of this video. I know for some of you it was probably a little long, and for some of you probably wasn't, but either way, thank you so much. I really appreciate it. If you guys could just leave a like or a comment or subscribe, I don't care. Just help me go through the algorithm, help others reach these videos, okay? Remember guys, I'm not charging anything, okay? So you're getting the best of the best, and I'm giving it my all. And don't forget to join the Discord as well. It's free. You guys don't have to pay for anything. You guys can reach me there. You'll see that I'm pretty active on there, and I did my best to share my daily trade setups, or at least as many as I can. So yeah guys, other than that, I'm just gonna leave with this quick verse here from 2 Corinthians 2:14. But thanks be to God, who always leads us in Christ's triumphal procession, and through us spreads the aroma of the knowledge of him in every place. I hope that that's what at least I'm sort of being able to do here with you guys. Hopefully you can see that through God is the reason why I am doing what I'm doing, giving you guys all this free content, this free knowledge, so that way you guys can one day hopefully be successful and financially free. So other than that guys, that's all I have for you. God bless, man. Take care. I'm praying for y'all, and I'll see you guys in the next one. Peace.